Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 26th of January. Starting off with the FTSE 100, where against all odds, it's managed to break through that area of the 75.65, the area of the 50 and 200-day moving averages. Above that, on an end-of-day closed basis, we're looking for 7800, which is the top of that rising trend channel from August. On the downside, the worst at the moment seen as 7420, the floor of that channel. The nightmare scenario would be that we break that uptrend line and head back down to 7180, but at the moment, especially with the RSI pushing through neutral 50, being above the 50 and 200-day lines, feeling a little bit more secure about the prospects for the FTSE, perhaps looking forward to a Labour government or something like that. In terms of the DAX, we've got the market following through on that December resistance line break around 16,600. Nice candles since then as well for the second half of the week. And the target here up to 17,900 by the end of next month at the top of that rising trend channel from October. Not expecting any price action back below the floor of the channel now, 16,600. The Dow is next, and records all over the place apparently, especially for the S&P, but in terms of the Dow, back above 38,000, we've got a nice little bull flag either side of old resistance, and that suggests that we are indeed capable of heading up to 39,300 by the end of next month at the top of that rising October trend channel. Worst that we're expecting on the cards now, really the floor of the channel around 37,500. Maybe 37,000, but it looks as though we've already tested that zone enough in the recent past. The market at the moment, maybe for some, Bitcoin, and here it's been a struggle for this market since the ATF news, but at least we're on the right side of 40,000, and also we're on the, it looks like we've got the floor of that rising trend channel from August around 39,200. Above that, initially up to the 50-day line, 42,800, and then if we can clear that 50-day line over the weekend, let's say, then we could have a retest of the 50,000 area at the top of that rising August trend channel by the end of next month. We're hoping for 50,000 by the end of this month, but we missed that by around $1,000. Going on to gold, which I forgot about yesterday, and here dithering a bit either side of the 50-day line, 2034. Want to see a clearance really of 2050, 2060. I think that's the 2060 especially would do the trick. Then the initial target there, 2100, ideally up to 2160 by the end of next month if things go right. At the moment, the RSI just on the wrong side of neutral 50, so could be a bit more dithering, and that might delay the upside for this market. Onto the stocks, and stock where there's not actually that much charting action, but we have had a gap to the upside, unfilled gap to the upside after a sideways shuffle above a rising 50-day line. So looks as though Arkle can deliver 0.55, but really looking for the stock to deliver rather more than that over the near term. Perhaps through 0.55 we could hit a resistance line projection from the end of 2022 up to 0.85 by the end of Q1 2024, but obviously that is predicting and projecting quite a long way, but the gap today quite helpful. Moving on to capital metals, which was a star during the autumn, but things trying to regroup at the moment. Here we've got a rising trend channel from September. Floor of the channel there around 3.25 pence. Above that, we're looking for the shares ultimately to get up to as high as 7 pence by the end of March. And obviously, if you're cautious, you wait for a break of recent 4 pence resistance to back the idea of a turnaround. You'd also wait for the RSI to get above neutral 50. Stock which is relatively obscure, in fact very obscure, is CT Automotive, and here broken out of the recent consolidation, broken through 70 pence. Above that, we're looking for the next level up here, which is up to £1, and we could perhaps see that by the end of next month. I haven't seen anybody talk about that company at all, perhaps even including the company itself, but above 70 pence looking decent there. Evgen Pharma is next, and here we are making progress within this broadening triangle base from the end of September. Bullish divergence line there as well from November, and a nice candle today opening at the low, so far at the high. Looking for 2.2 pence by the end of next month, or even sooner than that. Echo Energy is next, and here a great turnaround, up 50% today, but we want to see the shares really get back above the 50-day line and old December support there around 0.01. Above that, then ultimately we could head as high as 0.026 by the end of March, and looking for, I suppose, a retest of the upper teens by the end of next month. But an uptrend line there in the RSI window, suggesting that we may have a lasting turnaround here, although we want to be on the right side of 0.01 really to be comfortable. Ensilica is next, and here you can see that we've broken out of this falling wedge after a rather horrible ride for the shares over the last year. Maybe finally time to party. Above that resistance line break, 34 pence, looking for 45 pence by the end of next month, or even sooner, and that'll obviously fill the gap down from the early part of December for the shares. Moving on to global petroleum, and an announcement today which sounded very chirpy and chipper. Here you can see that the shares have already been trying to rehabilitate themselves, like the sideways move above the 50-day moving average. That's around 0.08. Above that, we're looking for 0.15 as soon as the end of next month, with this sort of V-shaped turnaround, and also with the bounce off, double bounce off neutral 50 RSI as well for the shares. But the upside bound while we're above 0.07. Moving on to Helium 1, which was the stock of yesterday, and also turns out to be the stock of today. Slightly kicking myself for being conservative in terms of the upside. I was looking for 0.4 while we were above 0.27, something like that. The next obvious area to go is the floor of that gap, or sorry, the top of that gap there from the end of December, just ahead of that placing, the last placing, hopefully the last placing ever. The top of the gap there at 0.72, and that's our target while we remain above mid-range today, so basically 0.5, it's above 0.5 to 0.72. It'll be interesting to see if we can clear that particular level, get an end-of-day close above that. I mean, that would really change the picture there for the shares, and could even open up the prospect of a move up to the 50-day line at 1.47. Obviously, the stock has been beaten up rather painfully in the recent past. Next up, a requested stock, Hydrogen Utopia, and here the shares hopefully bumping along the bottom being around 3.3 pence. That was the low area in October, and we've sort of maintained that. The key here in the near term is to get a decent end-of-day close above the 50-day moving average. That's currently around 3.8 pence, and the longer we stay above, the greater the chance of a move to the 200-day line, 5.4 pence by the end of next month, and that would be the first time we've been above the 200-day line since basically the shares came to the standard list at the beginning of last year, so that would be quite some change. Moving on to Optibiotix, which was one of the stars of last year, or last summer especially. Here we're breaking above the 50-day line again, so that means that might mean there's something going on. Up 26 pence is the level of that. Above 26 pence, looking for 35 initially, maybe by the end of next month. Ultimately, by the end of the quarter, hoping for the mid-40s and the top of that rising trend channel from July. Primorus is next, and obviously making a rather rare appearance here. You can see that shares have broken higher after a bear trap, double bear trap from below July support 2.4 pence, and broken above the 200-day moving average at 2.85. Initial target here 3.6 pence over the next, I suppose, by the end of this month, by the end of next week, and ultimately up to 4.2 pence, hopefully by the end of next month. Quite a lot of excitement as far as power metal is concerned, on the basis that it has 61% of golden metals, and that's had a decent rise. Big resistance here, surprisingly a big amount of resistance here at 0.9, but above 0.9 we are looking for, and still looking for 1.25 pence by the end of next month. So that should happen relatively quickly if we can get through 0.9 over the next few days. Stop loss at the moment around 0.75, which is the 200-day moving average. On to the last two. The first one is Seeen, and here we've got a rising trend channel, a wide one from the beginning of last year. Good to see the shares consolidating above the rising 200-day moving average, rather at 4.5 pence, let's call it. Above that, we're looking for up to 9 pence as soon as the end of next month. Obviously, if you're cautious, you wait for the 50-day line to break just under 6 pence before assuming better things are on their way. Finishing off with Wildcat, which is back in business in terms of the strong hammer candle yesterday and closed above the rising 50-day line, and today's strong price action. Initial target here 0.3, hopefully over the next week, and then ultimately 0.45 by the end of next month, or even sooner, to retest December resistance. That's it for me today. More updates over the weekend.